high-end dividend stocks on the ASX. So right now the market's pretty overvalued. The good stocks with solid dividends, predictable dividends like Coles, Woolworths, Bunnings, Wesfarmers, those ones, they're at 3 or 4% or less, which is not very good at all. So I bought in March. I was lucky to have a big thing of cash ready in March, so I bought in low. The stocks didn't really move much, but I've got a fair bit of dividends and they've gone up a bit, making me some money. But I wouldn't be buying in now because they're just not great priced. I'd be holding or maybe buying a small percentage of my available cash. So anyway, other things to look out for is if you're buying into a coal plant, it's got a high dividend yield, but coal is going to get destroyed when everyone goes to renewable energies, such as renewable energies. You know what I mean. So renewables companies are good to buy because they might have a lower dividend, but they're going to maintain their earnings and keep going up, or at least maintain their earnings. And anything non-renewable is going to die out. AGL has got renewable, but then it's got some non-renewable coal plants that are a pretty big percentage of their dividend yield, of their earnings, so that's something to look out for. What else can I say? Nothing really. Possibly the stocks are looking at is more the growth stocks. You just got to work out what is that company going to be earning in 10 years and how much they cost today. So that's easier said than done, so always stick to what you know. If you don't know about computers and stuff, then probably stay away from those companies and stick to what you can understand, your circle of competence. That's what Warren Buffett says, that's what Peter Lynch says, and it makes sense. Why are you buying something you know nothing about? Because you're not going to know when to sell it, or when to buy more, or how long to hold it for. So without further ado, we'll get into the high dividend yield stocks on the ASX. This is from a website called Market Index. It gets updated every month or so with the highest dividend yield stocks on the ASX. Let's go through them and I'll tell you what I think about them, in my opinion. Through the highest yield stocks on the ASX right now, and which are dividend traps and which ones could be alright, and what to look out for. So starting off the highest yield here, you can actually go to the site. It's called marketindex.com.au, or just simply type in Google high dividend yield stocks ASX and it'll come up Market Index. So Yancoal Australia, would I buy this one? 15% yield. Answer is no, I would not, because I haven't studied them that much, though coal is going to be closing down and making way for renewables. So if you're investing in an energy sector, you want to make sure it's all renewables, because some companies could be half-half and they're going to have to shut down the half that's not renewables, and that's going to destroy the money they make, like AGL here. So AGL, they do have renewables, but they do have some big generating coal plants that they're going to have to shut down. That's why they're a sell here, and why they've got quite a high dividend yield. Though they aren't that bad, they just have to factor in them closing down their coal plants. So anyway, Vicinity Centres, I'm not sure how good these are, though the things to look out for. So net tangible asset, if they sold all their properties and paid off the debt, the NTA would be $2.29. So say you bought this company, sold out everything they own, you get $2.29, and they're only trading for $1.30, which you're seeing is a good deal, but it's not always the case. So you're also going to have to look into them further. And so what else would you look for? You'd probably want to look at what properties they own, what sectors the properties are in, and you would, what else? Yeah, want to see how much debt they have. You don't want a company with a lot of debt in case bad stuff happens. You want a company that's got money there to get by. So this one actually doesn't look too bad, but you definitely want to look into it to see the debt amounts, which I won't do in this video. Let's go back to the list here. Fortescue Metals, it's keep rising and rising. Their owner, Twiggy Forrest, have actually done the floor heating at his house. Got $1 billion dividends last year, and it's getting another $1 billion this year, or maybe it was every 6 months, I'm not sure. Getting some crazy money, and I couldn't say yes or no to this one because it's all tied to the iron ore price. They're obviously a really low cost producer, so I think they cost maybe $10 to $20, correct me if I'm wrong in the comments, to produce iron ore, and they're selling it for $100 per ton, and they're doing some crazy amount of tons. So that's what they are. Centro Group, do not know about them. Do not know about this one. This one seems to be a financial one. I don't like those companies. Like, if you want to do finance, you probably should look after your own finances. Platinum Asset Management, not really sure. AGL, as I said before, I don't think they're that bad. Probably not so. You want to work out how much money is coming in from those coal plants that are going to have to shut down and work it out over the long term. Spark Infrastructure Group. These guys, I think they don't, pretty sure they just own the actual network, so they own the power and stuff like that. Not totally sure, but don't know much about them. Dividends up and down. Possibly worth a look. Not my cup of tea, or not something I've actually looked into that interests me. I'll just speak on stuff that I know more about, and I not say more about, I say like a little or more about, because I don't know that much. So we're on Capital Group, so they just buy, so they borrow the shares, so they got a team of researchers researching the shares, and they're buying into different companies, hoping the companies are going to grow. So it says here, object, deliver investors a stream of fully franked dividends, provide capital growth and preserve. So this would be a quite good one to grow in, because it's basically got a team of managers managing your money, and they're looking in how they're going to invest it. So you could probably easily stick a percentage of portfolio in there and just forget about it. So we'll go back now. Where are we? Alumina. It's tied to the aluminium price. I've lost a lot of money of that since I bought it last year. Though, just to know, to make aluminium, it costs a lot of electricity. So, yeah, to make it, you use a lot of electricity, so you have to get it from somewhere. But alumina is the cheapest producer, as all their electricity is come from hydro plants. So they're making aluminium, and they're doing it from hydro, except for some of the plants, like in Saudi Arabia, they're burning oil because it's also cheap there. But yeah, Woodside Petroleum, well, it's obviously petroleum, it's going down in the future because we're all going electric. You heard it from me, we're all going electric, or hydrogen, or liquid air. If anyone doesn't know what liquid air is, it's to store energy. You get air, you cool it down, it becomes 700 times smaller, and then when you want to get the energy, you heat it up, it becomes 700 times bigger, goes shh, blows through a turbine, creates energy. So that's liquid air. You don't need a water body like hydrogen, so I think that might be one to look out for as well. Okay, so we got Horizon Holdings. Choo choo! The train. They own trains. They transport the stuff around. Oh, they're transporting coal. But the dividends look up and up. Obviously, they're in the train tracks, so whatever they're transporting's got to get to somewhere. And they built these train tracks already, so unless someone builds a better way to transport them, possibly Tesla semis could take them out. I don't know. Do your own research. I'm not too sure on this one. Okay, I'm just giving you ideas and what to look for, right? Harvey Norman, never really shop there. I buy furniture from people on Gumtree who've paid full price, and then they're selling it off at a lower price. So that's how you buy furniture. Probably not buy it from Harvey Norman. Okay, Sydney Airport. This one, quite good. Look at its dividend yield. 2019. Oh, so they didn't pay one this year. Obviously for coronavirus. But hopefully in the future, we can get back on them. And so it might be a play for the coronavirus return, or return of plane, should I say. So obviously they own the airport. The planes have to pay them to park there, take off from there, that sort of thing. Guess there's shops in there. So, two main business units, which are aviation and leasing and advertising opportunities. Look out, Google. Sydney Airport is going into advertising. Okay, so one to look for there. I'm not actually invested into this one, nor would I want to. Not my cup of tea. Abacus Property Group, probably a property group. You just want to look at the NTA. Let's have a look at that now, actually. $3.30, and they're trading under that. So not a big discount, the NTA. You want to check how much debt they got. Don't think it says that on this page. Earnings yield. Probably not for me, this one. Okay, back in it. Stockland. Nope. Nothing really. National Australia Bank. People are going to have to repay the mortgages. So that's one to get into. Even though they're not going to earn as much, because obviously the interest rate's gone from 5% to 3%, probably to 2%. People are still paying it back. They're still going to make some money. And the dividend is, I think, compared to when before coronavirus, if they paid that same dividend, it would be like 15%. So obviously it's came down a bit. So it's still high in comparison to their price now. Okay, so Rio Tinto, mining. Obviously they're going to have to find the material on the ground, get it out of the ground, and get it to you. So I don't know, does the world run out of materials in the ground soon and Rio Tinto dies? Not sure. Although I am invested through them, through my high dividend yield VHY on the ASX. They buy into Rio Tinto. Okay, Origin Energy. I think they got a lot to do with gas, Origin Energy. So gas, although it's already in there, I'm not too sure about gas. Not my cup of tea. I'd rather go into renewables because at least they're going to grow, and gas possibly is going to die out. ANZ, that's like NAB, but NAB's little brother, little sister. Genesis Henderson Group, I do not know what these guys do. Let's find out. Asset manager. So they manage assets. So they buy stocks, all that sort of thing. No franking on these things. Doesn't entice me one bit. Okay, let's see now. Shopping. Nope. GPT, that's another property one. Property, you buy it, it deteriorates, and you have to rebuild it. So unless the land value is going up, you probably want to steer clear. Genesis Energy. What do these guys do? Generates and sells electricity from natural gas and LPG to residential. So, natural gas, bad for the environment, cheap, probably better than petrol, but stay away from those, because just steer away. Just go into renewables, and we'll get them cheaper. Everyone's working to get renewables cheaper, so they get so cheap, and natural gas will be history. Spark New Zealand, not sure. Okay, now for a special pick. BEP renewables, so the dividend's quite low on these guys, but they're 100% renewable. They have hydro plants, winds, and solar. 80% hydro. Hydro is the most consistent. And no, these aren't on the ASX, they're on the NYSE. But they're 100% renewable. Very good. Another one, if you want to go renewable, Meridian. So these guys are very small. They used to own a couple of hydro plants. Dividend yield, doesn't say. .89%, so it's pennies there. So obviously, my advice also is everything's quite high price now. So if you got some cash, I wouldn't be chucking all the cash in there now. I'd be chucking a bit, and as the earnings go up, if the price stays around the same, just a bit more as you get your money, and build up the cash as well. So then you're ready for, if there's correction, to buy in at a good price. Otherwise, you can just follow the trend up as well until you get that correction. So anyway, these guys, dividends, 2020. Yeah, so looking at these guys, they got a few hydro plants, wind, and solar farms. 100% renewable. Very nice. Okay, that concludes the video. Drop a thumbs up, comment down below. Maybe this video is stupid. Tell me what you think. Is this stupid? Like, you could just probably look at this yourself. Maybe just gave you some good ideas. Anyway, yeah, comment below what you like, what you don't like, and what you want to know more about.